across now to the management at Bajaj Electricals. Anuj Poddar, Executive Director at Bajaj Electricals, is now with us on the phone line. Anuj, thanks so much for taking out time for us. Could you just, tell us about how are you coping up with this, sort of a lockdown that is happening in? What are you doing at Bajaj Electricals? Employees would have had a lot of questions. What sort of answers have you given them?
Sure. Thank you and good afternoon to all the viewers. I want to talk about firstly, the financial and the cash flow side. And I heard on your channel, Rashesh talking about it briefly earlier, about the cash flow impact. The good news there for us is that we've just completed our rights issue and raised the funds over there. That's about 349 crores and use that primarily to repay debt. So we've already, as of today, repaid 325 crores of debt from that. So from a cash flow situation, we are in a very comfortable position. Our debt equity ratio that had gone up significantly last year is actually now trending and is going to be currently below 1.0. So we're in a very comfortable cash and financial position right now, which I think is good timing because it prepares us well for the difficult times ahead, depending on how long that lasts. Coming specifically to the impact of this, I think it is a severe or significant event. There is no denying that. Having said that, the job of a good management is really to be able to respond to that effectively. On that front, I would like to say that we focused on two things. First was by end of Jan, when you had a sign of this happening in China, we moved quickly to secure our supply chains and secure supplies of products. And we were pretty well positioned to make sure that irrespective of China, we would not have seen any impact on that. And we're very well comfortably placed to deal with, making sure continuous supply of our products in the marketplace. That situation, as we all know, has changed significantly. It is no longer a China supply issue, but more an issue across the world, including India, and an Indian market and demand issue. Again, I think the lockdown is something that we well anticipated many weeks ago. And the fact that Maharashtra would go first, to me, became apparent many weeks ago, seeing the numbers as they were trending. And so again, in terms of preparation for that, what we did is increased our production levels across our plants and moved our stocks out from our factories across the warehouses right down to the branches to make sure that if we get locked out across our plants or, central warehouse in Maharashtra, a supply of goods is available nationally. As it turns out, the lockdown, while it started in Maharashtra, has followed very quickly across the rest of India. And as we speak right now, we do have lockdowns across pan-India. That's a situation that is common to all. We cannot avoid it. But, we are well stocked with our goods across our pipeline so that when the lockdowns get lifted up in any of the states or regions, we are right there and available to service that. Just the last and third point, which comes to people, I think people are very important to us. We've been ahead of the curve again there in taking protective measures, both in securing our office spaces and also working on our BCP plan. So we had a work from home plan ready as early as 2 weeks ago, which we implemented incidentally a couple of days before the government actually announced or gave out advisories for work from home. So in every which way, all we try to do is make sure that we are well geared up to deal with what otherwise definitely is a very difficult situation.
Right. How are you dealing with your employees, Anuj? Again, are you all looking at working from home? Have you all taken some new technology platforms? How are things working on those fronts?
Yes, so we had moved to work from home for 80% of our staff, almost about, I would say, week, 8 days ago. That was a couple of days before the government advisory started coming in. We had enabled our systems, our technologies, our laptops, our video conferencing for all the people and the VPN systems, so everybody is able to do that. That 80% number has now gone up to 100% given the government advisories in this case. So in terms of connectivity, enabling work from home, we've enabled all of that. Having said that, the plants and production, a couple of essential functions, including sales forces and the EPC project site execution teams, these cannot be done in a work from home manner. So these were up and running till yesterday when, as per in keeping with government advisory and to protect our people as this is spreading, we have had to shut some of these things down. So that part will see an impact. All the other functions continue to work from home.
Anuj, how are you managing the cash flow mismatch? Because suddenly things have stopped, cash flow has stopped. You were talking about debt, but of course debt has come down. But there are a lot of other statutory payments which one needs to do. Salaries have to go. People may ask for advance. How are you just managing in the interim? What is the sort of contingency plan, if any?
So the cash flow, quite frankly, is not a concern for me. We are in a very comfortable cash position right now, as I said. So in fact, we're choosing to use the cash flow to repay debt because we are going to be underdrawing our limits right now as we go forward from the bank, and we will have comfortable cash reserves right through at least for the next 3-4 months. So I don't see any issue on that front. What we are actually working on more than the cash flow is re-looking at our business plans for the coming fiscal and doing a whole multiple financial scenarios analysis in terms of how are we going to deal with the revenue impact of this, and therefore what are the cost or the containment measures that we can take to mitigate the impact of that on our P&L. So just to repeat, cash is not a concern, but we are also conscious of trying to minimize the impact on the P&L.
Okay. Hi, Anuj. This is Mubina as well joining in. We got your point. Cash flow at this point is not a concern. You luckily just recently successfully had a rights issue as well. So that point is taken. But yeah, I want to talk about the revenue impact. Now, it's obviously well known that for Bajaj Electricals, for consumer durables, this whole summer period, this April, May, June is obviously when they get a big chunk of their revenues. A majority comes from this period. So my first question is I know it's still early days, and like you mentioned, you're looking at multiple financial scenarios. What could be the possibilities and the probabilities on your top line and bottom line? So if you could just share those initial projections with us, given that summer is quite an important period for you guys.
So Mubina, you're correct. It is an important period for us. Summer is one of the, I would say, 2 or 3 main seasons. The way our year is chalked out, 3 main seasons is summers because of fans and coolers, then the festive period simply because everything sells well then, and then the winters with the water heaters. We slightly escape the impact of this because the primary sales of us into the marketplace for fans, coolers, etc. starts much earlier. Coolers, they started selling since January, so all that has already been pushed out and booked. And the fans start selling out earlier, though it does continue selling into the couple of months. So it's not as if we lose the entire summer sales, but we lose the restocking and replenishment that one does over the next couple of months. So the impact is not entirely, but it is partly number one there. Having said that, the secondary sales, which is the actual marketplace sales, will be impacted, and therefore it will have some lag or lingering effect on that going forward. Number 2, in terms of just managing that revenue or estimating that, it's way too early for us to try and even estimate numbers. As we all know, the lockdown or the events have been developing very fast over the last few days. Lockdowns have literally come into play over the last couple of days. So we have been selling even as recently as Sunday. So I track daily sales numbers. Even till Sunday, we were seeing incremental sales, which I believe now in the last 7 to 8 days of this month will actually go down to almost negligible sales. And that's true for all of industry and everybody out there. So therefore, what we had anticipated might have been a Q1 FY21 impact. Now across industry, you will see some impact in the current quarter for most of the players. What we're trying to mitigate that against is how can we defer some costs that include, for us, for example, brand spend costs. We have deferred or delayed some of our campaigns that were to launch by mid-March, and even holding back what and how we choose to do in April on that. So we've basically gone into wait and watch mode on that front. When will this all open up? When will things change? Your guess is as good as mine. What we are trying to ensure is that we are ready, so the moment we see any opportunities, we can come right back and come back fast on that.
Anuj, one quick question. I think something that we've sort of kept on the back seat is that the budget had proposed that 10 to 12.5% hike in certain components, and that would impact Bajaj Electricals as well. Now, of course, we do know that China has had that supply chain disruptions, etc. They're coming back. You addressed that as well, I think, in your second answer, in your first answer. So I just want to understand, now, in an ordinary scenario, that price hike would have to be passed on to the customer. But over here, you have this import duty, plus Plus, I'm assuming component prices will go up because of this entire issue. Or, if you could as well just throw in some insight over there. So how would you deal with that? I mean, coupled with the sales, coupled with the fact that it's going to be difficult to pass on these hikes to the customers, could we expect some margin crunch? Do you think that could be the case?
So, and I had shared this on your channel in one of my earlier conversations, that yes, the impact of the budget hike is an adverse impact, but, our total quantum of imports from China is in the teens, so it is well below 20%. So it is not a material impact for us. It is just an impact for a limited set of product ranges that or SKUs that we import from there. And we had also actually passed on the price impact through price hikes to selected products in the fans category and certain other categories to clients. I think, therefore, the challenge really to me, or what's, is top of my mind and priority right now, is not the China issue in terms of supply, not the import duty hike issue, but the actual revenue loss in terms of just sales in the Indian marketplace. And the price hike is probably the lesser impact now, but the sales drop because of this coronavirus is the larger issue. And that in turn, because it's got negative operating leverage, the impact of that on margins to me is a bigger concern than actual import duty hike.
Okay, so it's the revenue loss, the volume loss that could be a bigger concern than anything else. For now, cash flow situation is well managed at Bajaj Electricals. Thank you so much, Anuj, for providing that clarity to all of our viewers. That's Bajaj Electricals for you. And on that note,